What's up, guys? Welcome back to Modern Traders. I'm Ben. I'll be your host today as we discuss life after GameStop. Now, we've been living through a period of basically retail traders' paradise the last couple weeks. Stonks have reigned supreme, rules have been broken, wealth has been transferred. Some Reddit traders saw a weakness in the system and they ran with it, and I applaud them. I was able to personally benefit a bit. Yeah, I was able to call out AMC to the group right before it took off, so I'm happy. But bottom line, billions of dollars have traded hands and found their way into retail traders' accounts, and now we're seeing the inevitable cool off of the short squeeze craze. And the question remains, after GameStop, what now? Well, in my humble opinion, anyway, we are going to see a run on the second biggest hyped stocks, the SPACs. And SPACs, if you don't know, is the special purpose acquisition company, basically already listed. Reverse merger with another company is a quick, easy way to get listed without the traditional IPO route. Now, SPACs offer two great opportunities. First, because they have a limited downside. Essentially, they start at $10, and that's as low as they can go. According to Seeking Alpha here, the amazing thing about SPACs is that they are required to hold the cash raised from investors in a trust until the merger is completed. So that means that there's minimal downside to buying near the $10 range as long as you're planning to sell before the actual merger. And further fuel the hype with SPACs in general, the management here is, basically they want to see the price go up as much as we do. So they're incentivized to find a target company that will excite investors, something that's in a hype sector. The EVs are popular for that reason. And, obviously this means a very interesting opportunity. Buying between 10 and 11, your loss is downside of $1, potentially upside double-digit returns. It's a beautiful thing, guys. So the majority of them follow this trend of catalyst cycle. That's the second main advantage here. The first one is the rumor catalyst. We'll get back to the rest in a minute, because the thing is, a lot of them don't get out of that first cycle phase. CCIV, case in point. Just on rumors alone, 300+% run up. Never made it out of the first phase. And some other companies don't even make it to the first phase. Pershing Square has not even talked about a potential target and still hasn't stopped it from being up 50% and consistently at that. But most of them do fall into the catalyst cycle, which really 6 is basically grouped into 3. You got the first catalyst being the merger rumors, second major one being the intent, next one being the vote date announcement as well as the actual vote, and the last catalyst is the one you got to look out for, usually the downside catalyst at the merger date itself. Now, a few examples of the cycle playing out. OPES acquisitions. They announced their intent to merge with BurgerFi, and they have an immediate massive 30% spike up, followed by 50% rumors and substantiation on the actual announcement. You see the cool off. You see it run sideways for a while, basic rumor mill cycle, and then on the news of the actual vote, beginning of December, you see another 25% spike on that predicted catalyst. And then a little sideways action, a little bit more spike on the ticker change coming up, but then immediately afterward, 25% run down. And you see it time and time again, guys. You see Lancadia, LCA, another prime example. They announced the intent to merge with Golden Nugget on June 6th, 60% immediate run up on predicted catalyst. Then you get the choppy waters, the ups and downs of the rumor mills again. Now here you get the actual rare occurrence of a real catalyst in the regulatory approval that they get around the 26th. And that causes a good little spike up, as it should. Then News of the vote, 25% spike up. Anticipation of the merger, another spike up. And then literally 1 day, guys. 1 day is all it takes for that ticker change to cause a 30% drop. Probably the prime example of this cycle playing out is Tortoise Acquisition. Shell, ticker symbol. Now, they announced the intention to merge with Hyliion and have just a beautiful 2-week-long 200% run immediately on that first, just very reliable catalyst. Okay, now they don't even really cool off that much. And then they announce official SEC filing, run up to $55, guys. I mean, $10 to $55. Another predicted catalyst leading up to merger, and then that dreaded merger catalyst. This is a 2-day run from 55 a share to the 20s, and it just keeps going all the way to 15. Now, this rule's not set in stone. It's a pretty good guideline, but there are exceptions. Kensington Capital is probably the best example of exception to this rule. KCAC, September 3rd, announced merger agreement with QuantumScape. Immediate 150% run up. And they cool off all the way back down to the $11.80 range. And then the anticipation for the merger runs it right back up to 22. And now this time they break the rules. This time the merger happens, and instead of a rundown, they just have an immediate massive spike, just a month-long run to 132 plus. To be successful traders, we always have to equip ourselves with whatever info and advantage the market gives us. And right now, we know there's a lot of extra money in retail traders' pockets. And let's be honest, guys, a lot of them aren't the best planners in the world. So, most likely going to go with what they know, right? And like we all know, based on evidence in the past, SPACs are money-making machines, bro. And especially with the extra knowledge that we have. So, we are going to attack this opportunity. We're always going to follow the money as successful traders. And my personal strategy here is just to identify companies with 2x, 3x potential that are still in that $10 to $12 sweet spot, and wait for a good entry point for a swing position and just basically ride out that hype cycle. So real quick, I'm going to run down 5 of my favorites that I'm looking to start a position in, possibly first thing Monday or whenever the best entry point presents itself. You know, don't force these trades.
Now, first off, what's going to determine the price potential, how high those catalysts are going to send these stocks, these SPACs pre-merger, are fundamentally 2 things. On the one end, you have the management team and the financial backing. On the other end, you have the actual quality and actual, well, not necessarily quality, hopefully quality, but hype really of the target. And hopefully you have a combination of both. First up is BTAC, Burgundy Technology Acquisition Corp. Now this one is a prime example of the management fundamentals. And BTAC doesn't have a target yet. A couple rumors, but nothing substantial at all. You can see right now it's trading at $11 even. It did dip into the 10s just recently, a little bit up into the 12s. I'd like to see it get a little bit lower than 11 for my personal entry, but like I said, I mean, at 11, we just talked about it's $1 downside, and depending on how hyped up the sector is at the moment, potential couple 100% upside. But no target in place just yet, but BTAC does have the management fundamental behind it. BTAC management team includes Leo Apotheker, former CEO of Hewlett-Packard and SAP. Also involved is Jim Mackey, also ex-SAP, and was involved for a long time with BlackBerry, bringing them from, you know, the old school phones into more capability of staying around long term. So, you know, we got a couple big names involved, people, you know, with little bit of fame behind them, big name companies, something that people recognize. It's going to help in this. It's all about hype. They have mentioned intentions to go with Israeli companies for potential targets. Like I said, nothing substantial. The rumors with Re-Auto, there was a little bit of a hype with that for a moment, but they got discredited. There've also been a little bit of rumors about possible target of eToro. But like I said, this one's just a prime example of that safe, just above $10 range. I don't want to say guaranteed profit, but pretty close to it. And you got the fundamental aspect of the management team's credentials. All it needs is a little bit of a catalyst in the hype cycle. Next list on the list is FCAC, Falcon Capital. Now this one is already up to the $12 range, which is a little high for that safety net valuation, but they don't have too notable of a management backing, financial backing, but this one does have the fundamental of a decent double hype sector target in ShareCare. ShareCare, it's a AI startup operating in the healthcare sector. So right there you got AI, which is obviously going to be a huge sector in the coming years, just getting started, and healthcare, which already is, teledoc, what have you. Now this one is, like I said, $12 already, but they are potentially announcing the ShareCare merger intention next week, which is a huge catalyst, a lot of times the biggest catalyst in the cycle. And while the management team's not hugely notable, one of note is Jeff Arnold, who also founded the WebMD website involved with the ShareCare company. So, I mean, $12 is going to be a steal if they do go ahead and get this announced next week. Just that hype spike alone. If we see the kind of volume I'm expecting in the SPACs in general coming off of the GameStop cooldown, something like this would usually send a spike. It's not too exciting, but usually might see a spike from 12 to 15, 17. But with the kind of volume I'm expecting, you could easily hit the 20s. I just want to keep an eye on. A little more excited about this one, Thunder Bridge. Thunder Bridge is just at the $12 range right now. It did hit 14 recently, cooled off back down to 1096, back up to 12 now. Actually, I think that at 12 it's really undervalued because Thunder Bridge, while also not really much notable management team, the target that they are in agreements with, do believe, at this point they're actually in agreements with. It's not a rumor anymore. Indie Semiconductor. Now, Indie Semiconductor, that's going to be a big deal. Indie Semiconductor is it's a provider of the semiconductor space already, AMD, Intel, what have you. But it's a leading pure play provider, semiconductor and software solutions for automotive companies, but more importantly for EV applications. The semiconductors and software is their mixed signal system on a chip, one of those fancy acronyms, SoC. It has LiDAR, connected car, electrification applications, just applied for the autonomous vehicle industry altogether in general. Another combination of hot sectors, the semiconductor, software section, and the EVs combined. And more importantly, like you don't see with a lot of these SPAC companies, Indie is already an established company with a product that's being sent out. They're currently already on 12 tier 1 vendor lists. They supplying to reputable companies, Magna International, Aptiv. The company's already shipped 100 million devices, said it increasing its OEM penetration and content per vehicle. And the financials are pretty decent as well. Revenue 23 million fiscal year 2020, which isn't too great, but they are expected to ramp up beginning 2023. I mean, 2 years from now, they're already expecting 10x growth at 204 million, 350 million, and 501 million, respectively, for 23 to 25. I mean, that's a 21 to 25, 20x growth in revenue for the company. I mean, that's amazing, guys, for a SPAC. So this one I'm actually pretty excited about. If I could snatch this one up in the $12 range, I might go ahead and get a position built up on it. I mean, if it doesn't go too crazy on the hype cycle, it might even be one that's worth taking your chances on holding through merger. I mean, obviously, we're going to take a little bit of profit. But, like I said, again, with the volume I'm expecting, this could easily be one you see take a huge $25, $30, $35 run. So, keep an eye on it. And this next one is an obvious one, but one of my favorites, VGAC, the Virgin Acquisition Corp affiliate. Now, this one I was kind of disappointed by. I was hoping to see Richard Branson SPAC bring something, Richard Branson, maybe Hyperloop, something space affiliated, something on the Virgin Galactic neighborhood. We didn't pan out that way. And it is currently trading at 16, hit 17 yesterday, but it's about 1604 right now. And we did see this run up already, the $10 floor. You can see about a solid 20%, 30, 40% run up just based on the affiliation with Branson and Virgin Galactic in general. Now, the target that they just announced merging with, it's a little bit of a surprise, but if you research a little bit more, it starts to make more sense. Now, 23andMe is the company that they've targeted for merger with, and they have announced intent, so it is official. Now, 23andMe is, as far as I knew before putting a little DD into it, is just an ancestry testing company. And they get the DNA, tell you who your ancestors were, which was pretty popular craze for a little while there, and it generated pretty good income. But since then, it's just been tanking. As far as I know, Ancestry.com, one of their competitors, has had to shut up shop. But what I found out is 23andMe is trying to branch out. Now they're using their data. I guess a lot of their customers let them collect the data. They opt in for that, and they're using that data for research and development and therapeutic programs, drug development. They currently have 30 therapeutic programs working based on the collected data. They're in drug development with. They actually have a deal for a specific drug in development with GlaxoSmithKline that they have a $300 million stake in 23andMe behind. They even get into the COVID market with their COVID severity calculator, also using the DNA data. So obviously the drug development business is a really expensive thing to get into, so this $3.5 billion merger with Virgin Galactic is going to give them that kickstart they need to really get going. I mean, they have a lot more upside potential with the drug development and the therapeutics than they ever would have with the ancestry testing. And so this one, I mean, it's got both sides of it. It's got a company that's got a recognizable name and a decent financial future, and it's got the strong financial backing and the well-known, popular management team. So this is definitely one to keep an eye on. I mean, like I said, again, with the volume I'm expecting, this is one that you can easily see going 100 times up, 2x, possibly 2.5, 3x from where it's at now. And last but not least, couldn't get away with not talking about CCIV. Now, CCIV, as you guys obviously are going to know by now, has been on a massive tear up just from the 8th of January. It's up from $10 up over 300%. And this one is, like I said earlier, one that's stuck in that first phase of the hype cycle right now. Nothing but rumors fueling this 300% run. Now, the rumors, obviously, they're rumored to be merging with Lucid Motors, and assuming that they do, then this run is definitely merited, and more than likely we're going to see maybe even 2x potential from here. But it's important to keep in mind that things can go wrong. I mean, there's a million different reasons why this merger could not go through, and in which case you're going to see this amazing 3.5 week, 300% run, is going to be way more amazing when it takes one trading day to get back to $10. But been a lot of hearsay, a lot of just coy attitudes from the management at Lucid. Well, I can't confirm or deny kind of talk. I feel like they wouldn't be so just so aloof about it if it wasn't going to happen. So they wouldn't want to just be running up the value of this company. Get risk being accused of manipulating the market, yada blah, yada blah. So more than likely, it's going to happen. And Lucid has announced that they do intend pump out cars in April, and they want to be listed by then. And the only way they're going to be able to pull that off is with spec. And Lucid, as self-proclaimed competitor Tesla, has just unlimited upside potential if they come even close to delivering on that, which shouldn't be too difficult to pull off, considering that the CEO is the former head engineer for Tesla, so he's got the background. Now, the Lucid Air that's coming onto market in April is a $169,000 car, so not really terribly realistic for the average driver, but they do plan later in 21, 22, I think 23, to have more affordable models available. We're going to have something in the here they are. We're going to have the 130 range, the 87.5 range, the 69.9 range. And really, all signs point to the merger going through, and Lucid would have to have a major press disaster to not basically skyrocket from where it's at now. And this is one, like I said, it's trading at $35 a share already, and pre-merger, that's typically dangerous, but assuming that this does get confirmed, this is one that, even with the typical SPAC cycle, even with the downfalls at 35, it still might be a decent buy, and it still might be a decent place to start a position. This is going to be a real long-term hold. So even if there is a good-sized dip at the merger, it's going to be worth just holding through it. If say it runs up to $60, $70, merger, worst case scenario, drops down to 30 or 40 again. We're talking about a company that's supposed to rival Tesla, so if we're getting a upside of $1,000 plus a share, then short-term $40 drop in recovery is not going to be any kind of a big deal, really. But anyway, those are my picks for the specs to keep an eye on. Obviously, there's a whole lot more of them. This is just 5 out of dozens and dozens, and out of those, there's probably at least 20, 30 solid companies that are going to spike up when we see this volume influx coming. I'm expecting to see it as early as next week, assuming that the market's green. So, get your research done, have your company picked out.
And real quick before we take off, just want to invite everyone to the home base of Modern Traders, the Modern Traders Discord page. Got a growing group of great members, good spec and stock and general base conversations going pretty much at all times. We keep daily updated resources for you, FDA approvals, upcoming catalyst, news, earnings. I like to put ARX trades up there. Just anything to give you a little advantage in the market. We post a daily watch list of best stocks to keep an eye on in the next trading cycle. We do daily call-outs. Got a great team of guys doing call-outs every single day of the week. Mostly options trades, entry points, exit points, real-time updates on what we got going on, as well as spread plays, calls, debit spreads, straddles, you name it, advanced strategies, all kinds going on at all times. We even have swing trades, usually a couple of those going. We do paste the daily results up. Right now it's, I think, right about 99% accurate, but when we do get some losers, we'll post those up there too for you. Everything above board, nothing to hide. And we do believe in giving back to our members. All the premium services are free for the time being, so come check them out. But when we do have the monthly dues kick in, which pay for themselves real quick with the call outs, but once they do kick in, we're going to have a monthly contest with monthly prizes for first, second, third place, and you know, the larger the group gets, the bigger the prizes will get, guys. So, like I said, come check us out. Modern Traders LLC over on Discord. There'll be a link in the description. And until next time, I'm Ben. Thanks for stopping by.